what if the future of XRP has already been predicted not by humans but by artificial intelligence connected to one of the most powerful tech minds in the world? And what if that prediction is so shocking that it could completely change how you see your investment today? Right now, there are whispers spreading across the crypto space that AI systems linked to Elon Musk's vision are pointing toward a massive shift in XRP's value. And some investors are quietly accumulating thousands of coins before the crowd wakes up. The real question is simple: are you early or already too late? Now, let's break this down step by step in a clear and simple way so you can understand what is really happening and why this topic is getting so much attention. There has been a growing trend in the crypto world where artificial intelligence is being used to analyze market patterns, predict price movements, and identify opportunities before they become obvious to the public. These AI systems, process huge amounts of data, including market trends, global financial signals, investor behavior, and even regulatory developments. And they do this much faster than any human ever could. Because of this, many investors are starting to trust AI driven insights more than traditional opinions, especially when it comes to volatile assets like XRP. Now, when the name Elon Musk gets connected to anything related to AI, the attention automatically becomes massive because he has been deeply involved in artificial intelligence development for years. His influence in technology, combined with his history of moving markets with just a single statement, makes any connection between his ideas and crypto extremely powerful. So when people started talking about AI models inspired by or linked to his ecosystem analyzing XRP, it immediately triggered curiosity and speculation. The main discussion right now is centered around a bold claim that AI projections are suggesting XRP could experience a significant price movement in the future. And this is why some voices in the market are saying that holding a certain amount, like 2,500 XRP, could be a strategic position. This number is not random, as many investors often look for realistic accumulation targets that could potentially benefit from long term growth without requiring extremely large capital. To understand why XRP is even part of this conversation, you need to look at its core purpose. XRP is designed to be a fast and efficient digital asset for transferring value across borders, and it has been positioned as a solution for financial institutions that want to move money quickly and at low cost. This use case is very different from many other cryptocurrencies, and it gives XRP a unique place in the market. Because of this, any advancement in global finance, banking systems, or digital payments can directly impact its future potential. AI models often look at utility, adoption, and scalability when analyzing assets, and XRP checks many of these boxes. It already has partnerships, real world use cases, and a clear goal in the financial ecosystem. When AI evaluates these factors, along with market cycles and in historical price behavior, it can generate predictions that sometimes seem surprising to human investors who only focus on short term price action. Another important factor is timing. The crypto market moves in cycles, and those who position themselves early during quiet phases often benefit the most when momentum returns. AI systems are particularly good at identifying these quiet accumulation zones where prices are relatively stable, but underlying signals suggest future movement. This is one of the reasons why the idea of buying a specific amount, like 2,500 XRP, is being discussed, because it aligns with the strategy of preparing before a potential breakout. At the same time, it is important to stay realistic and understand that predictions, whether from humans or AI, are never guaranteed. The crypto market is influenced by many unpredictable factors, including regulations, global economic conditions, and investor sentiment. Even the most advanced AI cannot predict the future with complete certainty, but it can highlight probabilities and trends that might not be obvious at first glance. So, what you are seeing right now is a mix of technology, speculation, and strategy coming together. On one side, you have the power of AI analyzing complex data, and on the other side, you have investors trying to interpret these signals and make decisions based on them. The connection to Elon Musk adds an extra layer of excitement, but the real focus should always remain on understanding the fundamentals and making informed choices. As we continue this breakdown, yeah, the next important step is to understand what artificial intelligence systems are actually looking at when they analyze an asset like XRP, because this is where things start to become more interesting and also more realistic. AI does not rely on hype, emotions, or social media trends in the same way human investors often do. Instead, it focuses on patterns, data, and probabilities that are built over time through massive amounts of information. When AI studies XRP, one of the first things it examines is historical price behavior. Every major movement in the past, whether it was a sharp rise or a deep correction, it becomes part of a larger pattern that the system tries to understand. These patterns are not always obvious to the human eye, especially when emotions like fear and excitement distort decision making, but AI can break them down into clear signals. It looks at how XRP reacted during previous market cycles, how long accumulation phases lasted, and what conditions were present before significant price increases. Another major factor that AI considers is market structure. This includes how XRP moves in relation to the overall crypto market, particularly during bullish and bearish phases. In many cases, XRP has shown delayed reactions compared to other assets, meaning it does not always move at the same time as the broader market. For some investors, this delay is frustrating, but for AI models, it, it can be seen as an opportunity, because delayed movement can sometimes indicate a buildup of pressure that eventually leads to strong momentum. Liquidity is also a key element in AI analysis. XRP is known for having high liquidity compared to many other cryptocurrencies, which means it can handle large transactions without extreme price disruption. This is especially important when considering institutional interest, because large financial players need assets that can support big movements of capital. AI systems recognize this as a positive signal, because it suggests that XRP has the infrastructure needed for larger adoption in the future. And another critical piece of the puzzle is utility. Unlike many digital assets that rely mostly on speculation, XRP has a clear use case in cross border payments. AI models tend to favor assets that solve real world problems, because long term value is often tied to actual usage rather than pure hype. The ability of XRP to settle transactions quickly and at low cost, yeah, makes it attractive in scenarios where efficiency matters, especially in global finance systems that are still dealing with slow and expensive processes. Regulation is another area where AI analysis becomes very important. The crypto market is heavily influenced by legal clarity, and XRP has been at the center of regulatory discussions for quite some time. While uncertainty can create short term pressure on price, AI often looks at how resolution of such issues could unlock future growth. In simple terms, what looks like a problem today can sometimes become a catalyst tomorrow. And AI models are designed to identify these turning points. Now, when all these factors are combined, including historical data, market cycles, liquidity, utility, and regulatory developments, AI starts to form probability based projections. These projections are not fixed predictions, but rather scenarios that show what could happen under certain conditions. This is where the idea of accumulation comes into play, because if the probability of a positive outcome increases, some investors choose to position themselves early rather than waiting for confirmation when prices may already be higher. The discussion around holding 2,500 XRP is part of this strategy. It represents a balance between risk and potential reward. For many people, it is a number that feels achievable while still offering exposure to possible future growth. AI does not specifically recommend exact numbers in a human sense, but it can highlight zones where accumulation might make sense based on risk models and expected outcomes. Another interesting aspect is how AI interprets global financial trends. The world is slowly moving toward faster and more digital forms of money transfer, and systems that can support this transition are likely to gain attention. XRP fits into this narrative because of its focus on speed and efficiency. AI systems track these macro level changes and connect them with specific assets that could benefit, creating a broader picture that goes beyond short term trading. At the same time, it is important to remember that AI is not predicting in isolation. It reacts to new data constantly, meaning its outlook can change as new information becomes available. This is why smart investors do not blindly follow predictions, but instead use them as one part of a larger strategy. They combine AI insights with their own research and risk management to make balanced decisions. What we are seeing right now is a situation where multiple signals are aligning in a way that is catching attention. It does not mean that a massive move is guaranteed tomorrow, but it does suggest that something could be building under the surface. This is often the phase where early positioning happens quietly before mainstream attention returns. So the real question now becomes even deeper. If AI is identifying these signals early, what specific future scenarios is it projecting for XRP, and how big could those possibilities actually be? Now, let's move deeper into the most important part of this discussion, which is understanding the actual future scenarios that artificial intelligence is projecting for XRP, because this is where speculation starts to turn into structured possibilities based on data. AI does not think in terms of hype or extreme claims. Instead, it builds multiple pathways depending on how different conditions play out over time, and each pathway carries its own level of probability. One of the primary scenarios that AI models often highlight for XRP is a steady growth phase driven by increasing adoption. In this situation, XRP does not suddenly explode overnight, but instead moves gradually as more institutions and financial systems begin to use it for cross border transactions. This type of growth is usually considered more sustainable, because it is backed by real usage rather than pure market excitement. AI systems tend to assign a higher probability to this kind of scenario because it aligns with how financial technologies typically evolve in the real world. In this steady growth model, XRP's value increases as demand slowly rises while supply remains relatively controlled. As more entities start using it for payments, liquidity improves even further and trust in the system grows. This creates a cycle where adoption leads to value appreciation, and value appreciation attracts more attention, which then leads to even more adoption. AI identifies these feedback loops as strong indicators of long term potential, especially for assets that already have a functional use case. The second scenario is more aggressive and is the one that often captures the most attention. In this case, XRP experiences a rapid price movement triggered by a major catalyst. This could be regulatory clarity, large scale institutional adoption, or integration into global financial infrastructure. AI models do not assume, this will happen randomly, but they do recognize that if certain key events occur, the market reaction could be very strong due to the amount of suppressed momentum built up over time. In simple terms, this means that XRP could remain relatively quiet for a long period and then suddenly move very quickly when a major barrier is removed. AI systems often flag these types of situations because they represent asymmetrical opportunities where the potential upside could be significantly larger than the downside risk, especially for those who position themselves early during low attention phases. Another scenario that AI considers is the competitive landscape. XRP is not the only asset aiming to play a role in global payments, and AI takes into account how it compares with other technologies. It analyzes speed, cost, scalability, and existing partnerships to determine whether XRP can maintain or improve its position over time. If XRP continues to hold an advantage in these areas, AI models may increase the probability of positive outcomes, but if stronger alternatives emerge, those probabilities can shift. There is also a neutral scenario, which is often overlooked by many investors because it is less exciting. In this case, XRP continues to exist and function, but without major breakthroughs or explosive growth. The price may move within a range influenced by general market trends rather than unique developments. AI includes this scenario to provide balance because not every asset experiences extreme outcomes, and sometimes stability itself becomes the main characteristic. What makes AI analysis powerful is that it does not lock into one single prediction. Instead, it constantly adjusts the weight of each scenario based on incoming data. For example, if there are positive developments in regulation, the probability of the aggressive growth scenario might increase. If adoption slows down, the steady growth scenario might lose some strength. This dynamic adjustment is what makes AI different from static opinions. Now, coming back to the idea of holding 2,500 XRP, this number starts to make more sense when you look at these scenarios from a probability perspective. Investors who believe in the steady growth model may see it as a long term position that could gradually increase in value over time. Those who are more focused on the aggressive scenario might view it as an opportunity to capture a large move if a major catalyst appears. In both cases, the strategy is built around positioning before outcomes fully develop. Another layer to this is psychological behavior in the market. AI models track how investors react to price changes, news events, and overall sentiment. One common pattern is that most people, enter the market after a significant move has already happened, while early participants often act during periods of uncertainty. This behavior creates cycles of accumulation and distribution, and AI is very effective at identifying where the market currently stands within these cycles. Right now, based on the type of discussions happening and the level of attention XRP is receiving, some signals suggest that the asset is still in a phase where not everyone is fully focused on it. This does not guarantee anything, but it does align with the kind of conditions where early positioning typically occurs. AI does not say that this is the perfect moment, but it highlights that the conditions are worth paying attention to. It is also important to understand that even in the most optimistic scenarios, growth does not happen in a straight line. There are always corrections, pullbacks, and periods of doubt. AI models account for this by analyzing volatility and risk, helping investors understand that patience and discipline are just as important as timing. So when you put everything together, you begin to see a clearer picture. AI is not simply making a shocking prediction, it is outlining a range of possible futures based on real data. And some of those futures suggest that XRP could play a much bigger role than it does today. The excitement comes from the possibility, but the strategy comes from understanding the probabilities. Now we reach a very important stage of this discussion where we focus on the possible triggers that could push XRP from a quiet market phase into a much stronger and more active movement phase, because understanding these triggers is what helps separate speculation from real potential market catalysts. Artificial intelligence models do not rely on emotions or hype. Instead, they track specific conditions that historically lead to strong price reactions. And when these conditions start aligning, attention naturally increases. One of the biggest triggers often discussed is regulatory clarity. The crypto market is heavily influenced by legal decisions, and XRP in particular has spent years under regulatory uncertainty. AI systems recognize that once uncertainty is reduced, the asset becomes more attractive to larger investors and institutions. This is because big financial players do not like unclear legal environments. If clarity improves significantly, it can open the door for wider adoption, and AI models often flag this as one of the strongest possible catalysts for long term growth. Another major trigger is institutional adoption. This is where banks, payment companies, or financial networks start using XRP more actively in real world systems. AI tracks this through partnerships, integrations, and transaction data patterns. Even small signs of increased institutional usage can be important because they suggest that the asset is moving beyond speculation and into practical utility. if adoption increases at a steady pace, it can slowly build a foundation for stronger market confidence over time. Liquidity expansion is also a key factor. When more money flows into an asset, yeah, price movement becomes more dynamic. AI systems monitor liquidity across exchanges and trading platforms to understand how easily XRP can be bought or sold at different levels. If liquidity increases along with demand, it can create conditions where price movements become sharper and more significant. This is especially important during periods when market attention suddenly shifts. Another trigger comes from global financial trends. The world is gradually moving toward faster digital payment systems, and AI models constantly analyze macroeconomic shifts, including inflation trends, cross-border payment inefficiencies, and digital transformation in banking. If traditional systems continue to struggle with speed and cost, solutions like XRP become more relevant. AI connects these macro trends to specific assets that could benefit, and XRP often appears in these comparisons due to its focus on efficiency and settlement speed. Market sentiment is another powerful but often underestimated trigger. AI tools analyze social media activity, search trends, and investor discussions to measure how people feel about an asset. When sentiment is low but improving, it can signal early recovery phases. When sentiment suddenly spikes, it can indicate incoming volatility. In XRP's case, sentiment tends to fluctuate based on news cycles, and AI uses this data to identify potential momentum shifts before they fully develop. Technological developments within the ecosystem also matter. If there are upgrades, improvements, or new integrations that enhance XRP's functionality, AI systems treat these as positive indicators. Even if these updates are not immediately reflected in price, they contribute to long term confidence. Over time, consistent development signals can strengthen the overall outlook and attract more interest from serious investors. Now, when all of these triggers are combined, regulatory clarity, institutional adoption, liquidity growth, global financial demand, sentiment shifts, and technological progress, AI starts to build a picture of potential momentum. However, it is very important to understand that these triggers do not need to happen all at once. Sometimes even one strong catalyst is enough to change market direction significantly, especially if the market has been quiet for a long period. This is where the idea of positioning becomes important. Investors who are watching these signals closely often choose to accumulate during calm phases rather than waiting for confirmation. The reason is simple. By the time a trigger becomes obvious to everyone, prices may already reflect that change. AI models highlight this delay between early signals and public awareness, and this gap is often where strategic positioning happens.